In this session we're going to look at the sales daybook and the sales returns daybook. So we will explain what these two books are and what they record. We'll illustrate how they should be laid out, and we'll demonstrate how to record sales and sales returns information in them. Now firstly, and before we get on to the sales daybook, I just want to go through a couple of items of sales terminology. The first is cash sales. It's important that you're aware that this does not mean sales that are paid by paper notes such as £5, £10, £20 notes or coins. What cash sales means for an accountant is a sale that's paid immediately. So we receive payment at the same time as the invoice is raised. And the way that the invoice is paid is largely irrelevant. So a cash sale would include payments made by paper notes and coins, as well as payments made by cheque, by bank transfer. It's whether or not the payment is made immediately that's important. Sales on credit or credit sales, however, this is where payment is made after the invoice is raised. So credit has been granted or given. An example of this might be where a company offers some or all of its customers 30 days credit. So after the customer receives the invoice, they will then have 30 days in which to make payment. Having gone through those definitions, we can now get started on the sales daybook. The sales daybook, or SDB, this is where we record details of the sales made on credit. So we don't record cash sales here, it's just credit sales. Now, different businesses will record different information in their sales daybook, and they'll do so because each business might have different needs in terms of the information they want to record. But we will see the similar information in almost all sales daybooks. We'll see the date of the invoice being recorded, as well as the customer name and customer reference number. We will also record the invoice number and the gross, VAT and net amounts taken from the invoice. I mentioned customer reference numbers a little bit earlier on. Any customer that we deal with on credit is going to be assigned a unique customer reference number. This is often done using an alphanumeric system where we combine both letters and numbers. So for instance, we've got Smith 001. Now we do this, we create and assign unique customer reference numbers in order to help us identify the correct customer accounts that we're dealing with. I'm sure you'll appreciate that many companies that offer credit might be dealing with lots of people who have the same or similar names, and by using a customer reference number we can make sure that we can still easily identify which account we should be dealing with. Now that we've gone through that, let's have a look at an example of a sales day book. Basically, it's just a table of data. Here, the data that's going to be recorded is the invoice date, the customer reference and name, the invoice number, and the net VAT and gross amounts, all of which can be taken from the sales invoice. So what we would do is we would fill in that information as sales made on credit are made to build up a table of data. Now, our table of data should be ordered in date order, and also the invoice numbers should be recorded sequentially. This is to help us make sure that we record all of the information, all of the details of our sales, and don't miss anything. So for instance, anyone looking at this table of data can look at the invoice numbers and see whether or not an invoice number is missing. At the end of a period, whether that's a day, a week, a month, we would calculate the total of our net VAT and gross columns. Now, the time period over which we decide to calculate our totals will vary between different businesses. So for some businesses we might only need to do it on a monthly basis, whereas others might want it to be done daily. What is worth remembering is that the total of our net and VAT columns should equal the total of the gross column. And it's well worth doing this sort of check regularly. This is what's known as a cross-add check, and it's one way of reducing the danger of making a mistake in our table of data. Now, our sales day book can of course be arranged in a different manner, and up on the screen at the moment we've got exactly the same data recorded in this table, but what I've done is I've swapped the columns around, and that's perfectly okay. There's no problem in doing that. A further alternative is to take our net sales and split that column into different sales, different types of sales. So in the example on the screen I have oak sales and ash sales, and each invoice, the net amount is split between those two different types of sales. And this can be very useful if we want to keep track on how different parts of our business are performing. But ultimately, we're still recording the same information, we're just doing it in a little bit more detail. So the total of all of our net sales, so that's both net sales columns and the VAT column, will still equal the total of gross sales. What we'll now do is have a look at the sales returns day. Now, the sales returns day book, often abbreviated to SRDB, this is where we record details of any credit notes issued by the business. Now, a credit note is issued in order to either cancel a previous sales invoice or to reduce the amount that was recorded on the sales invoice. And these are issued for a variety of reasons. It may be that the original invoice was incorrect. It included, say, amounts that had been calculated incorrectly, or had included goods or services that were not in fact supplied. Or it might be that some goods have been returned, perhaps because they were damaged or with the wrong specification. So credit notes are issued for a variety of reasons. And we will record the information on the credit notes in our sales returns daybook. And our sales returns daybook is going to be almost identical to the information that's recorded in the sales daybook. And so will the layout. Okay, so up on the screen I brought an example of sales returns daybook, and we can see that it is very similar to the sales daybook. In fact, the only difference is that rather than an invoice number column, we've got a credit note number column. Again, remember, our credit notes should also be recorded sequentially. In addition, the total of our net amounts and the VAT column should equal total of gross. So we can also do a cross-add check on the sales returns daybook in the same way that we did it for the sales daybook. And that is a brief summary of both the sales daybook and the sales returns daybook.